Good morning, everyone. Thanks for joining us today. We're glad you could join us here on this Wednesday morning in July. This is Matt Tour. I'm a marketing specialist at IMES, Insurance Agency Marketing Services on the annuity side. So, been in this business a long time. Seen a lot of changes over the years. First time we've seen this type of rate environment probably for about 20 years now, where rates are going up consistently, and definitely a great time to be in the annuity market. This is the best opportunity we've had for a couple decades based on rate increases. We've seen the highest rate guarantees in the 3, 5, 7-year rate guarantee market in over a decade. Highest cap rates we've seen probably in a decade based on where caps are right now. The index strategy is really a great time to be in the annuity space. We continue to offer our new producer builders. Great way for you to earn some additional dollars based on investments. And regarding your client's business, you can earn really nice incentives in the first 180 days of being licensed through IMES, anywhere from $100,000 up to $1 million levels of business. And then we have a lot of different options to choose from, be it seminar systems, radio shows, iPads, cash, a lot of stuff going on here. So great way for you to build up your business and have IMES pay you some additional perks based on that. We also have our referral program, refer agents to IMES. We'll go ahead and pay you a quarterly override on those clients, those referrals business. We also have our market reimbursement, reimburse $100 for $100,000 of annuity premium on the index side. And a great way for you to build up a couple different nice accounts, one for referrals, one for marketing, and a great way for IMES to participate in your expenses based on those sides. We have a great back office support team here at IMES. We've got a great new business team, helps process your business from start to finish. We also have a great creative team that can help you with advertising. You're going to do some social media advertising, can help you along the way for that. Got a great marketing staff that can help you out with quoting, business solutions, anything you may need for your clients. We can help you out with on both the life and annuity side. A great contracting team that can also help you on that side. We do utilize the Firelight e-app system with the most of our carriers at this point. We've seen a huge increase this year in the number of agents using Firelight, probably up to almost 50% now of agents utilizing e-app systems. And we're probably going to see, obviously, some more companies come on board with Firelight. Majority of our companies already are. If you're using Firelight, you know how easy it is to get your business processed compared to handwriting business, much easier on the Firelight system. As I mentioned, we do have a great creative team. We continue to help agents out with website development, advertising, emails, postcards, newsletters, whatever you may need. We have a great staff on that side that can help you out with all those activities. And I know we've seen a lot of agents redoing their websites the last couple of years, updating their look, changing their colors, a lot of good stuff going on that end. So do keep that in mind. We also have a great website ourselves, the IMES Inc. website. You can go on there and take a look at latest interest rates, do quotes, look at income comparisons, look at the best cap rates we have on our fixed rates, indexed rates. Everything is updated on a daily basis on that. We have utilize Annuity Rate Watch, a great system we can utilize online and gives you the latest and greatest on interest rates. You can compare cap rates, bonuses, all kinds of good stuff there. We also have our Retirement Analyzer software program. It's a great software package you can use with clients. Kicks out great reports, very colorful, very detailed, a lot of good stuff you can look at based on where clients sit today for retirement, where they want to be 5 years, 10 years down the road, and take a look at a lot of different situations that may come up with nursing home stays, hospital stays, premature deaths with spouses, all kinds of good stuff you can add into that system there. So definitely keep that in mind. And if you do have any questions along the way here this morning, you can get those typed in and be glad to get those answered for you, get you taken care of on that side. Be glad to get those done during the meeting here. Otherwise, I'll be contacting everyone after today's meeting, discussing what we went over today, and see if you do have any questions on that side. We have a great wealth management team on the security side here. They can help you out with getting your Series 65 test taken, help you out with investment strategies. We got great platforms of investments right now. It's been a kind of a rocky road here this year on the security side, ups and downs, more downs and ups. But we do have a great team on that end. If you're looking at getting yourself involved on the security side of the business, maybe want to get your Series 65 in tow. We've seen a huge increase on the number of our top producers that now offer securities in conjunction with insurance. It's a great way for you to cover all the bases. You hate to refer someone down the road and all of a sudden you lose that client to the other individual. You want to keep as many activities flowing through your business as possible, and having a securities license also always helps. I'll leave this poll open for about another 20 seconds to go. If you do have interest, I know we have a great team on that end that can help you out with that side of the market. We've got a huge increase in assets under management the last couple of years. Then we started this business up about 3 years ago, and every year that number's grown. Even with the market declining this year, we're still seeing some advancement on those AUM dollars. So do keep that in mind. I'm gonna go ahead and close this up real quick. Get moving on here. So we offer a all expense paid 2 or 3 day training. To be flying on a Wednesday, fly it on a Friday. I'm gonna go ahead and launch another quick poll here, but it's our Annuity and Life Academy. I know we just had one about 3 weeks ago. Had that one in Des Moines. Looking at 1 or 2 more this year. One for sure in November. We're looking at another one possibly here in Omaha in September. Good way to get different views on what's going on in the market. We bring in a number of great speakers. The one that we have in Omaha will probably have 6 to 8 company reps here, which will be going over some of the programs they offer. We bring in some of our top annuity sales agents. They'll go over some ideas on sales practices, what they do to get in front of more clients, what they do to close more sales. A lot of good stuff will be covered at that. We also go over some software programs available through IMES, go over some lead programs, go over a lot of sales information. So no agents that come out to these meetings typically go back, and their business definitely percolates the next few months based on attending this meeting. So definitely worth your time. So some you have some interest in looking at coming in the fall, mark off yes. We'll put you on the list as interested party. And then if you don't have time this year, I'm sure we'll do some more next year. But it's a great chance to get some ideas from other producing agents. Ask questions to some of the top producers. We do a forum where we have 3 or 4 producers will be asking or answering questions based on your situation. So a good chance to get some correspondence going both directions on that end. I'm gonna close this up in about 10 seconds. So if you do have interest in getting some more information on our Life Annuity Academy, to mark off yes, otherwise mark off no, and we'll go ahead and get you taken care of on that side. Go ahead and get this advanced here. We have a really nice CD replacement kit. I'll be going ahead and sending out this to all the attendees today. So just sign up and attend the meeting today. I'll go ahead and get the CD replacement kit. It's got some great information for comparing CDs versus annuities, looking at different sales strategies. There's a CD prospecting letter in there. You look at retirement pitfalls, based on your investments. And you hate to have an underperforming side of the client's investment. You want to make sure that most of their dollars are gaining momentum based on what's happening in the market and interest rates. And bank CDs have really not gone up much in rates this year, much less than the fixed annuities. So you're definitely at a distinct advantage on that side. We'll be talking about a number of carriers this morning and some of the programs are offering on the annuity end. I know we're looking at fixed rates in the 4 to 4.5% range with a number of carriers right now between 3 and 5 year chassis. Just got an announcement from one of our companies called Aspida. They're raising rates on the 25th of July. They're going to be up in the 465 range on a 5 year. So we are quickly gaining on a 5% rate, hoping to have that in the next 30 to 45 days. I think when you see that 5% barrier broken, we're going to see lots more money moving around, and clients right now waiting for higher interest rates. I know the Fed's looking at bumping rates up the end of July. They're also talking about bumping rates up again in September. We'll see how that plays out, but we're definitely seeing a really good rate environment right now. I mean, a year ago we had most of our rates were in the 2s, and now we're in the 4s. So it's doubled in the last 12 months on interest rates, and I think you're going to see that trend continue with the rising rates at least through August. They're going to try to keep rates pretty steady through the fall election, and then see what happens, going into 2023. But America's got a really good 5-year contract. Current rate's at 4.2. You have 10% available starting the first year. Full death benefit, nursing home, and hospital confinement waivers. We also carry Nassau Re. They have plans with or without withdrawals. If you go without withdrawals, the rates are slightly higher. You're looking at 430 on a 5-year and 440 on a 7-year with no withdrawals. Otherwise, if you have withdrawal options, the rates are going to be at 410 and 420. Minimum deposit's 10 grand, issued to age 85. It's a revolving surrender charge plan, so you got 30 days at the end of the period to move your dollars and save money on that situation. I know that one thing we're going to discuss a little bit today is the bonds versus annuities. Take a look at kind of what the history on your basic investment portfolio is looking through the years, especially recently. Most of your brokers were saying that you should have 60% of your money in the market, 40% in bonds is your safe side. Unfortunately, this year we've seen both sides dropping. You've seen stock market portfolios drop between 20, 30, 40% this year. And then you see the bond portfolios dropping around 15 to 20%. So if your safe money is down 15% and your risky money is down 25%, your portfolio is really tanked this year based on your clients' portfolios. And one good thing about diversifying some of those bond dollars into annuities is instead of having negative returns this year, we've seen a huge increase in fixed rates. If you can offer a client 4 to 5% fixed rate returns on their safe money, that is really safe money. You're making returns. You're not going to be getting double-digit returns annually, but you do have gains in your safe dollars as opposed to losses. You hate to have your safe money losing money, and that's what's been happening this year in a rising rate environment. Those bond portfolios have plummeted. We have not seen this happen in decades, but you had both bonds and stock market returns here in 2022 in the negatives. And I know that I saw some quotes. This is the worst 6 months, the beginning of the year, we've seen on the stock market since 1970. So you're going back 50 years on how bad the market did in the first 6 months of the year. And they haven't seen negative numbers like these, in 50 years. And the bond portfolio numbers going down. I mean, it's a double whammy to clients. And These clients are getting their monthly statements or quarterly statements from their 401ks. Instead of 401ks, they're now considered 301ks or 201ks. So those have really dropped in value, and your clients are getting nervous. They don't want to see, negative returns on a monthly basis. They're putting more money into those portfolios, and their values continue to drop. So it's really a bad year on the security side. We haven't seen a year like this since 2008. And the market dropped 35%. But right now we're, kind of on pace for minus 20. It's kind of the number so far this year. A lot of portfolios. And I know with the election coming up, I know a lot of the in-house parties want to see these values go up before the election. Otherwise, I know they have limited to no chance to get reelected based on that situation with everything else going on with inflation. It's been a very difficult year for most individuals. Their bills are going up, and they're making less money and losing lots of money in their investments. So not a good situation right now. Atlantic Coast Life, they have both compounded and simple interest rate contracts. Safe Harbor is simple interest. Safe Haven is compounded. You can see they have a first-year rate, which is 1% higher than the second-year rate. Take a look at their 5-year on the simple rate, 5 3/4. First-year rate on the 5-year contract, renewal rate at 4 3/4. That's guaranteed years 2 through 5. Great combination. You kick that up to a 10-year, 655 first year, 555 years 2 through 10. That's going to be a pretty sizable rate of return. You're up in the mid 5s there. Great opportunity for your client to make some good money there based on that. Atlantic Coast also has a indexed annuity. Their 5-year rate guarantees at 270. They have a 4.1 cap on an S&P 500 annual point to point. Very average right now in these caps. A lot of other companies have really increased their caps. These are still in the 4s, and the monthly cap is at 1 3/4. Whereas a lot of other companies' monthly caps are in the 2.5 range. So do keep that in mind. Sentinel Life, another company we do a lot of business with on the multi-rate guarantees. 5.5, actually 4.5 is the rate right now on a 5-year rate. 7-year rate at 455, and a 10-year rate at 460. We do have some states that the rates are lower, including Minnesota and Florida. Those rates are going to be between 10 and 20 basis points lower per strategy, and sometimes more than that based on that. So thing about Sentinel is you have basically a straightforward chassis contract, no perks. It doesn't have withdrawals, doesn't have the RMDs available, no full death benefit. But if you do have, client that's looking for some of those additional benefits, you can add those on. Just going to lower the interest rate slightly. Good thing about this contract, it goes down to $2,500 in deposit on qualified or non-qualified money. Available to age 90 in most states, only to 80 in Oklahoma. But most states it is up to age 90. Your client wants interest only withdrawals. The fee for that's only 8 basis points. So they're going to start taking out, interest in 30 days. They can do that. Their just interest rate will be 8 basis points lower. So a little bit lower, not too bad. Silac, another company we've really seen a lot of business go to the last couple of years. They just had a rate increase announcement about a week and a half ago. They have a 2-year contract at 260, 5-year at 345. That includes 5% free withdrawals, full death benefit. Minimum deposits $10,000. Issue age is to 90. If you want to go without the perks, the rates are higher. No free withdrawals. It's a surrender charge at death. Those rates are 315 on a 2-year and 4 on a 5-year. So anytime your client can make 4%, that's really a boost right now based on where rates are. Good thing to have a 4% rate. So plan that I like a lot. I actually own one of these. The Choice 4 has a first-year rate at 5.5%. Has a current base rate of 4, so there's about a 95% chance that's going to renew at 4% for the next 5 years. Has 10% free available in the second year. has a full death benefit issued to age 85. And as you can see, the commissions to age 80 are also 5.5. So you have 5.5 commission, 5.5 first-year interest rate, 6-year contract. Great combination. The best combination we have anywhere right now for compensation and interest is this Equitrust Choice 4 contract, and a really super strong program. Even if you have someone in age 85, commissions at 4.125 on that, and interest is still at 5.5 first year, 4% base, making over 4% on an 81 to 85-year-old. Really a very strong combination right now on those rates. F&G Fidelity and Guarantee, they've got their contract on the MYG. 365 is the 3-year rate, 4% on the 5-year, 405 on the 7-year. Issued to age 90. They pay pretty average commissions. Rates or commissions do drop in half from 80 to 90. So do keep that in mind. Seen a lot of business this year going to Guggenheim. They have a 4% rate for 3 years, a 5-year rate at 4.10, 8-year rate at 4.25, 10-year rate at 4.35. Compensation is 2.5 to age 80 on the 5 through 10-year contracts, and the commissions do drop as you get to older ages. It is up to age 90. You do have 10% available in the 2nd year, and you do have $5,000 as your minimum deposit for qualified money, $10,000 for non-qualified, and does have a full death benefit. So pretty nice features there. Just added on a new company here recently called Aspida. It's a really strong carrier. They have a number of really good fixed rates issued at age 90. Their rates are going up to these new rates effective the 25th of July. We have a 360 rate for 2 years, 4.3 for 3, 465 for 5. So that's the highest rate we're going to have right now based on a 5-year rate guarantee. And then you have a 7-year at 480. See, we are quickly approaching that 5 number. So I'm hoping to see that 5 number in the next 30 days. This is a chassis contract similar to Sentinel. If you want to add on additional liquidity or death benefit features, there is a fee for that. They do pay full commission to age 80. The policy itself is issued to age 90. So a really nice contract. I think we're going to see other companies bump their rates up to be competitive with Aspida here in the next few days. And I wouldn't be surprised to see someone really close to 5% very soon on these contracts. Again, you can follow us on Facebook and LinkedIn. We do have presence on both sites. We do send out some social media posts on both ends. So if you're on Facebook or if you're on LinkedIn, you can see our situations there on both sides. And if you have any questions, you can get those asked now. I did have a question again on the kind of environment we're in on annuities. Great environment right now, the best environment we've seen in 20 years. Interest rates are climbing, the stock market's wavering. We've seen huge months of business the last few months. Business coming in is picking back up steam right now here at the end of July. You're going to see some fantastic months in August and September. In October, interest rates do continue to climb. The stock market continues to waver. You're going to see a lot of more money moving into fixed rate and contracts. And people retiring earlier in life now, they're looking for income opportunities. They're looking for safe investments. You don't want to have a portfolio that your safe money is down 15%. I don't consider that safe. I consider that very risky. And I think the annuity is a great piece of the pie that more and more people are getting involved in. And I know that some of the legislature out there are looking at giving people, the opportunity to put more of their money in annuities, so on their 401k contracts. And the government wants to see people succeed. and see people have their money there for the long range, and having an annuity in their portfolio definitely is going to add to that. I think it's a great way to avoid risk and have your clients earn good returns and have no risk to go backwards. So I know we see a couple companies right now with caps on the 8 to 9% range on index cap rates. Fixed rates are up in the 4 range on some of these index companies policies. I mean, you can earn a 4% fixed rate or 4.15 and have an 8 to 8.5% cap rate. It's really a win-win. You can really split the client's money up. Maybe they think the market's going to drop this year. They're going to weigh their money into the fixed rate, maybe put 60% of their money in fixed, 40% in the indexed. Or if they think the market's going to pop back up from where it's at right now, do the opposite. Do 60% in the indexed, 40% in the fixed. They're real aggressive, maybe do a 75-25 split. And that way they're really set for the future. So I will be giving everyone a call that was on today's meeting. I've got a couple links I'm going to send you based on some really good articles you can utilize on the annuity side. One's annuities versus bonds, is a Kiplinger article. And we also have another link for another good article on annuities. But if you do have any questions, give me a buzz. This is Matt Tour. Glad to have you on this morning. Try to keep these under a half an hour. Appreciate your time here. If you do have anything that you need, definitely give me a call. I'm gonna launch a quick email. If you'd like to get some additional information on some of the companies we talked about today, some of their products, just mark off yes. Be glad to get those over to you. Be glad to get that information out to you via mail, email. We're seeing a lot of people get licensed with the speeder right now. That's a company just increased their rates, a new player in the MYG market. Probably going to introduce a new indexed annuity this fall with a SPIDA and see how that plays out. We got a couple other companies coming on board here the next few weeks. Brand new company in the MYG market. I'm sure they're going to be very competitive on their rates. And we're really happy to see that, the competition out there in that space is huge, and these companies don't want to be left out. So they are definitely, some carriers buying business right now with higher rates. So I think we're going to see that trend continue, and hopefully see a very strong end of the year here based on interest rates. And we look forward to a very strong finish to 2022, and hopefully see things continue in the right path going into 2023. We do offer trips. We do have our Greenbrier trip coming up in early October. That was for production that was through the last 18 months. It ran through June of this year. We'll be announcing a new trip based on qualification July 1st of 2022 through December 31st of 2023. So it's going to be another 18-month qualification. Should be a very nice location. Definitely worth your while to qualify for that. Otherwise, everyone have a good end of the month here in July. Hopefully things cool off eventually. It's been a very warm week here in Omaha. We look forward to a great end of the year. Otherwise, everyone have a great summer, and we'll speak to you soon. Thank you.